Ladies and gentlemen, good day and welcome to Action Construction Equipment Limited 2Q FY23 results conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amar Kedia from Ambit Capital. Thank you, and over to you, sir.
Thanks, Ranju. Good afternoon, everyone. On behalf of Ambit Capital, I welcome you all to the 2Q FY23 results Concall for Action Construction Equipment. Representing the company today, we have Mr. Saurabh Agrawal, Executive Director, Mr. Vyom Agrawal, Senior Vice President, and Mr. Rajan Luthra, CFO of the company. I now invite the management for a brief opening remark, following which we'll open the floor for Q&A. Over to you, sir.
Good afternoon, everybody, and welcome to this earnings conference call for discussing the results for the last quarter and half year ended 30th September 22. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agrawal. I hope that all of you have had an opportunity to look at the company's financial statements and the earnings presentation, which have been circulated and uploaded at the stock exchanges. In the last quarter, we have appointed KPMG as our statutory auditors of the company in place of Messrs. Brand and Associates, who had successfully completed their tenure of 5 consecutive years. And quarter 2 FY23 marks KPMG's first reviewed quarter for the company. To brief you on the standalone financial performance of the second quarter of financial year 23, the operational revenues grew by 36% on a year-on-year basis to approximately 491 crores, with an EBITDA margin of 10.7%. The EBITDA during the quarter increased to rupees 52.56 crores at the rate of 10.7%, in comparison to 36.33 crores at 10.1% on a yearly basis, which is a growth of around 45%. The PBT grew by 56% and PAT grew by 55% year-on-year to 46.55 crores and 35.66 crores respectively, while the PBT and PAT margins stood at 9.5% and 7.3%. On a sequential basis, the operational revenue was more or less flat. However, EBITDA grew by 15%. PBT grew by 17.8% and PAT grew by 23.6% as compared to quarter 1 FY23, with a margin expansion of 1.5% during the quarter. It is important to note that despite the challenging times and erratic inflationary scenario, the company achieved its highest ever revenues, EBITDA, PBT and PAT margins for the second quarter due to sustained focus on cost efficiencies and customer-centric approach. In the quarter gone by, we continued strong performance in our identified segments. In the crane segment, with our dominant market leadership position, we registered revenue of 356.88 crores with margins of 12.81%. On a year-on-year basis, the crane segment registered a robust revenue growth of 48%. Similarly, we were able to achieve 36% growth in our construction equipment segment with minor increase in our EBITDA margins. In metal handling segment, the revenue fell short by 5%. However, the margins were sustained above 10%, and in agri segment, the revenue grew by 6%. Also, we would like to state that in the quarter gone by, the markets were a little subdued due to excessive and prolonged monsoons and showed signs of revival in the second half of September, owing to festive demand. We believe that going forward, the demand scenario should remain strong, aided by government's unwavering focus on urban infra and rural development. In the last quarter, we have also received good export orders, which will start reflecting in our numbers from quarter 3 onwards. Further, for first half of FY23, we have been able to grow our revenues by 45% to 990 crores. On the half-yearly basis, EBITDA grew by 43.9% to 98.3 crores. PBT grew 53.2% and PAT grew 52.3% to rupees 86 crores and 42.35 crores respectively. In the first half, the margin profile stood at 9.9% at EBITDA level, 8.7% at PBT level, and 6.5% at PAT level. A consistent, strong performance is reflective of our strategy clarity, strength of our brand, our capabilities, talented people, and the agility to run the business. We have a clear and compelling strategy, and with our positioning in infra, manufacturing, and agriculture sectors, underpinned by strong operational excellence and our distinctive qualities, capabilities, will enable us to drive growth forward and create a purpose-led, future-fit organization. On the operational side, while there has been some easing of commodity prices and supply chain pressures, inflation still continues to be a significant challenge for the industry. Except for mild steel, which has seen some meaningful correction from its peak, most of the other commodities remain volatile and elevated. So in summary, while the operating environment has improved, it has remained challenging. Further, if commodities were to remain where they are today, we expect the price versus cost gap to narrow further, leading to a sequential improvement in gross margin in December quarter. Further, in the last quarter, we have already started to set up a new manufacturing facility for bigger cranes, that is truck cranes, crawler cranes, and rough terrain cranes. The new plant is expected to commence commercial production by March end 23 and will increase our capacity to manufacture bigger cranes by approximately 4 times, as we aspire to grow in the bigger cranes market with infrastructure growth in the country. This new plant will simultaneously enable us to release capacities for forklift and tower cranes business by about 40 to 50% each, since currently the activities are in a combined plant, and by shifting to a new plant, we will unlock the capacity of these two segments as well. Looking ahead, we remain optimistic about the medium to long-term prospects of the company and believe that our building blocks are firmly in place for sustainable growth in all the 4 segments where we operate, leading to expansion in top line, bottom line, and margins of the company. Further, we would like to revise our earlier guidance and expect a growth of 25% plus in crane segment for the current year and a 30 to 35% growth in construction equipment segment. Material handling and agri segments are expected to grow at around 15% during this year. On the whole, we are looking at least a 25% increase in our top line for the current year, with expansion in our EBITDA margins as compared to last year. With this, I would like to open the call for question and answer session. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Abhishek from Jago Niveshak. Please go ahead.
Good evening, sir. So I have only 2 questions. First being the missile system or the multipurpose tractors for defense or the army, which you have recently started developing. Does the economics work over there? Why that question came because most of us don't like when we supply directly to the government, as there has always been an issue for the payment clearance. So can you give some picture on this B2G contract, what you have been getting recently?
See, I don't think we have any issues on the payment front. It is directly from the ministry, and things are, as of now, going smooth. We already started executing that order. Yes, on the margin front, there is a slight pressure because when it was quoted and conceived between then and now, definitely commodity and inflation pressure has played out. So the margins are a little squeezed in this order, but on the whole, we do not see any commercial problem with this particular order.
Okay, great. The other one is, as you're supplying the defense equipment through another company like maybe Tata or L&T, so in that case, aren't we leaving some margins on the table for them, or these are these are simply small parts which they need to complete their equipments?
Basically, this crane is a part of a missile handling system, and which also includes, a 6x6 or a 8x8 special vehicle. It's a special chassis, not like normal commercial vehicles, coupled with some other arrangements. So it is a part of that. So we are definitely taking our part of the margin, and how much we have left for them is for them to decide.
Okay. Okay. Sure. And just one last follow-up. Do we have any preferred banking channel partners or an in-house finance solution for these people who are coming to you as a client, or we are leaving it for them to decide which one they want to go for?
We are working with all the possible NBFCs you can think of who are into equipment finance. And obviously the biggest of them being HDFC, ICICI and HDB, etc. I mean, we work with everybody, whether it is IndusInd, Kotak or Citibank, whatever name comes to mind. So if there is, if any customer asks us to support, then obviously we take them to our leading finances. Otherwise, most of the customers are wise enough and they want to choose and negotiate on their own with the finance companies for the interest rates.
Correct. Okay, sure thing. That answers my question, sir. Thank you so much. All the best.
Thank you.
Thank you. Next question comes from the line of Chinmay Kabra from MK Global. Please go ahead.
So I just wanted to know first that the market, how is the market
Chinmayji, waiting for your question.
Mr. Chinmay, can you speak a little louder? We cannot hear you.
Hello, am I audible?
Yeah.
Hello.
I said, what has been the crane market, how has it grown over the YoY basis this quarter?
You're talking about the crane market?
Yes, sir.
It is evident in our results. We've been able to, on a quarterly basis, year on year, we've grown by about 47-48%. But quarter on quarter, it has been flattish because generally quarter two is pretty subdued because of monsoons, and this time the monsoons were a little extended again. So quarter on quarter, it was flattish. Otherwise, more or less, we've been able to grow around 47-48% year on year. And I can give you an idea how we've grown 47-48%, about 28-30% because of volumes, approximately about 10% due to price increase, and another 10% on account of product mix, wherein the higher end or the more expensive or the bigger models have been chosen by the customers. So the market is shifting or migrating a little towards the bigger models.
Okay. So on this bigger model, as you said, this facility that we are putting for the bigger cranes, how much capex will be required for this, sir?
Again, what I was talking about was more about pick and carry cranes. This facility is primarily for cranes which are above 40 tons. So 40 tons and bigger, which are truck cranes, roller cranes, and also rough terrain cranes. Where we are currently present in truck cranes as well as roller cranes. And we are increasing our capacity by around 4 times. So instead of 40-50 cranes, we will be capable of making 180-200 cranes once this facility becomes functional. And capex envisaged is about 30-35 crores for this activity, leaving out cost of land because we already have land available with us, ample land available with us, and this can eventually create at least 300-400 crores revenue size, which can easily be expanded to 500-600 crores eventually from this facility.
Thank you. Mr. Chinmay, we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. A reminder to all the participants, please restrict yourself to 2 questions. The next question comes from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Congrats on good set of numbers. I have a question on this material handling. The volume has degrown quite significantly. We have been able to raise prices and maintain the revenue and the profitability. But what is the outlook from here on? Means the commodity prices have gone down, what we understand. Can the focus will again move back to getting volume for both material handling and agriculture equipment? Or you think you will like to keep the prices as what they are, both these two segments?
In the material handling segment, our revenues on year-on-year as well as quarter-on-quarter have gone down by about 5-6%. But I think it's just a temporary phase. Market was definitely a little subdued on account of our order booking, but things have again started looking up. And I think this fact was further aggravated because of overall pricing increase. And we also did have a little bit of some production issues with respect to the quantity we wanted to produce. But on the whole, things are on track, and hopefully by the end of year, we should again see a 15% growth in this segment as well. And yes, there was a little, let's say, a rebuff with respect to the pricing increase we wanted here. So, but now things have settled in. And like I said, by the end of the year, we should be closer to at least about a 50% growth here as well in metal handling. And something similar with agri, yes, there has been pricing pressure because of commodities, but now things have started cooling off. So hopefully in quarter 3 as well as quarter 4, which are generally our bigger quarters. So the pricing pressure will also be let off, a little bit of operating leverage will also come into play. And here again, I think we are looking at least a 15% growth in our top line, coupled with normalizing our EBITDA margins to earlier levels.
The growth, what we are expecting, do we expect that to cross the last year's volume? And
yes, 100%.
In both these two segments?
Yeah, 100%.
And one thing, on the cranes side, what we are seeing is increased activity on the residential and buildings side, okay?
Yeah, real estate.
Yeah, real estate. And even in tier 2, tier 3 cities, the construction is becoming more and more vertical, okay? So what is the sense you are getting on the tower cranes side, and how is the competition evolving, and what growth you are seeing in that segment? And can it be a significant large growth for us over next 2-3 years as the real estate starts improving? So some thoughts on that. And earlier we had a limited product, but high market share. So are we thinking of increasing our products height and the capacity to increase the weightage on that product?
First, I'll answer the first part of your question. It's been approximately 9-10 months we have been seeing heightened activity with respect to real estate segment, which primarily employs a lot of tower cranes because buildings are, construction is more or less vertical now, land has become so expensive. And if we compare our H1 numbers of this year on year-on-year basis, so I can see that we have increased our numbers also by approximately 45-50% in this segment. So hopefully it is here to stay. And the tower cranes we are doing, which we are manufacturing in India, are already up to 16 tons capacity, which are very well suited even for prefab construction. But in some construction sites, you also require a 20-25 ton crane where the prefab sections are very heavy. So that model currently is under development with us. So hopefully in the first half of next year, we will also have a 20-25 ton model. And we do not want to go bigger than that at this juncture because that is 99% or even more of the Indian market. When the numbers for 20-25 tons are very limited, but we want to be present in that market by manufacturing in India. Apart from that, our heights are quite suitable for the buildings. Rather, we are giving cranes up to 250-260 meters height already in the country, which are some of the highest heights in the country. And apart from that, in this portfolio, we also have a self-erecting, we call it a mobile tower crane. So, wherein we are working at 24 meters and 36 meters height. So there again, maybe in the next year, we'll introduce a new model, 40-42 meters height, with slightly better reaches and jib capacity to cater to, the gap between self-erecting tower cranes and the normal fixed tower cranes, cater to that gap. And so that, the product line will become seamless for the future. And yes, real estate definitely seems to be growing. New fresh construction is definitely picking up and picking up very fast.
And lastly, on the backhoe loaders, okay, and the construction equipment, are we seeing how is the market developing? Means, are people reducing the prices because of now commodity inflation going down, and what would be our strategy from here on to gain market share in that side of the business, which is the larger market opportunity for us?
Yeah. In the construction equipment segment, we have been able to attain growth both on quarter-on-quarter and especially on a yearly basis by about 35%. Prices, I don't see people or competitors reducing any prices because the way commodity had increased, especially in the first half of Q1 of the current year, and then normalized. So it is still similar to the levels more or less at which it was in the last year. So nobody was able to take price correction enough to cover up for that increase. So I don't see selling prices cooling off. Rather, they can only increase a little. And we are very confident and hopeful, and all the hard work that we have been doing has started to pay off. So hopefully this year we should be able to do a 30-35% increase in our construction equipment portfolio, maybe backhoe even more than that in terms of numbers as well.
Okay. Okay, thank you from my side then.
Thank you. Next question comes from the line of Astha Sundarka from Niveshaay. Please go ahead.
Good evening, sir. My question is with respect to the cranes business. So what is the product-wise breakup in volume terms?
Product-wise breakup in volume terms. Luthra Sahab, can you just give the break? You want it for the quarter or the first half?
For the first half.
For the first half.
In second
and quarter also, sir. And quarter also, sir.
So you want it on quarter or half yearly?
Quarter, sir, quarter.
Quarter 1309 in pick and carry crane. Mobile tower crane we have done 25 and fixed tower crane 65. Only crane business, na? Truck mounted as well.
And crawler cranes also.
Truck mounted we have done 20 numbers.
Okay.
And crawler cranes also we have done about 16 numbers.
16 numbers.
Okay. And for H1 also, sir, if you could give the numbers.
H1 for current year, full this year we have done pick and carry 2787.
Okay.
Mobile tower crane 42. Fixed tower crane 141. Crawler crane 18 numbers. And truck mounted crane 38 numbers.
Okay, sir. And the second question is, like 60% of your input cost is steel, right? Which is inclusive of both the in-house as well as the assembling part.
Yeah.
So how much of this 60% is only for the in-house part? That is one. And second, in steel also, there are a lot of types. So can you just name those types and percentage of each that is used in fabrication part?
The breakup of 60% in-house and outside will be slightly difficult, but I would say approximately 50-50.
Okay.
Approximately. And what was the second part of your question?
Second is that steel has also a lot of types. So can you name those types in the raw material part for the fabrication?
The most prevalent what we are using is for all our structural, which is MS, mild steel.
Okay.
In 250, 350 and 410 grades.
Okay.
This is the most prevalent. We also use up to 700 as well as 900, but that is in very lesser quantities especially for bigger cranes.
Okay.
But this is with respect to the flat products. We also use a lot of long products, that is angle channels, square pipes. They are again in 250, 350 and 410 grades.
Okay.
Their standards become different. And then apart from that, we use all types of alloy steel, whether EN8, EN19, and a lot of other different alloys for our forgings, and a lot of pig iron which goes into our castings.
And also breakup between the flat and long steel?
That I don't think we will have an answer immediately available at this forum, but we can definitely get back to you, Luthra sir.
Okay. And if you could also tell the prices of these types, if you could give.
Yes. But here I would just like to add, flat steel has definitely corrected significantly, but long steel has not connected, the way it increased. It has only corrected half of what it had increased in the first quarter this year. And alloy steel and castings have, reduced even lesser in terms of percentage the way they had increased. So, but Luther sir, ये long steel and flat का breakup and basic maximum use material in every category if you can give price.
So we'll have to work it out. So we'll come back to us.
Okay, and the prices, if you could give.
If you could just quickly drop an email regarding this on our concerned email ID, we will revert back to you on this.
And sir, are you looking for any price hikes further in 1 or 2 quarters?
I think we should be increasing our price from 1st of January because as a standard trend, we have been doing that for the past 4-5 years. So, because apart from this hyperinflation thing and then a little cooling off that we have seen, still other inflationary pressures are very much there. So, we will definitely need some price correction. So, in all probability, we should be doing it in, first week of January.
Thank you. Ms. Asta, we request that you return to the question queue for follow-up questions. Next question comes from the line of Sri Diora from Paladin Capital. Please go ahead.
Hi, good evening. My understanding from the previous quarter was that a lot of buyers were postponing purchase decisions, waiting for the commodity prices to cool off and therefore for equipment prices to cool off. And that sort of ties in with the fact that volumes have been flat. So now that your prices have, and it looks like prices have gone up, which has led to revenue growth, but is it not the case that for these buyers to seal their purchase decisions, you have to start dropping prices?
I think buying generally on the whole has come back, to be very frank with you, end of September.
Sorry, can you repeat that? I missed that. What has come back?
The buying has come back.
Buying has come back, okay.
Buying and the sentiment has definitely come back, and it generally happens around the festive time. So things that way seem to be in place, and I think more or less people have, firmed up or come to terms with the fact that things have become expensive, and so I think it is not a problem anymore, really.
So these price levels and should sustain, and then margins will sustain or improve as your volume grow in the subsequent quarters.
I would say that 1.5% further margin expansion is possible on account of whatever commodity has currently cooled off. So I think we should be expecting it within this quarter, most of it further. And obviously, along with further increase in numbers and our revenue, operating leverage will definitely kick in, and that will further help us expand our margin.
Okay. And the guidance that you gave, could I just clarify? You said it's 25% growth on cranes, 30% plus on construction equipment, and 15% each on the last two segments. Are these correct?
On the whole company basis.
Sorry?
25% on the whole company basis.
And this is volume growth or overall growth?
This is revenue growth I was talking about.
On a volume, because the price hike itself has been substantial if I look at the year-on-year comparison. So what would the revenue growth be, the volume growth be?
25% growth is there going to be total. I would say that on account of pricing it will be 8 to 10%. And balance would be more with respect to numbers and maybe a slight change in product mix there and there.
Okay, all right. Thank you.
Thank you. Next question comes from the line of Akshay Kotari from Envision Capital. Please go ahead.
Yeah, just wanted to know our working capital has been put into inventories and errors and other financial assets. So, any specific reason and what was there in other financial assets?
We definitely are working capital in quantum as well as number of days is a slightly stretched as compared to end of last financial year, where it was about 109 crores and about 39 days. And currently, it is at about 210 crores with 56 days. Primarily on account of, our inventories, which have increased by about 70-80 crores in the last 6 months. And it was a conscious decision because we were expecting good sales in the month of October because of festive season. And festive season came a little early. Generally, it is in November. So inventories go up in October and already become reasonably okay by December. So that's why you see slightly elevated inventories in September. And hopefully by end of this quarter and finally by end of the financial year, we would be at similar levels, our targeted working capital of around 39 to 40 days.
So on the debtors front and also on the other financial asset, what is actually going into that?
On the debtors front, we are, I think, doing pretty fine. We are at about 32 days receivables as of now. And if you look on a year-on-year basis, from 46 days, we have improved it to 32 days. So that is well in control. Our creditors are also in reasonable. Rather, we have been very good paymasters in the recent past. Our creditor days have only reduced. But yes, the main culprit is inventory, which will be taken care of in this quarter and subsequently in the next quarter.
I wanted to know what is also going in other financial, 18 crores of increase in other financial.
Let me clarify. We have got certain assets which we give on lease, so that has been classified as financial assets. We have got certain assets which we give on rent, so that are being classified as financial assets.
Okay, so there has been an investment in rental assets.
Yeah.
Okay, these are cranes specifically or some corporate assets?
These are basically crawler cranes and one or two piling rigs.
Okay. And sir, there was
rental division, look at
in
the rental activity.
So these are basically the commerce, the piling rigs, financial assets.
Then financial lease, whatever.
Yeah, that is financial lease because that is a financial lease, so it has been classified as financial assets.
Okay. And so investments have increased to around 222 crores. So and I was just checking the annual report. So the investments are in the public market. So any specific rationale because QIP money raised. So any plans to deploy it and your view on it?
Yes, we have all the plans to deploy that money. That's why it was raised. We have spent very small portion of it already. It was done, I think, 1 or 2 quarters back. And we are still under negotiation for the slightly bigger inorganic growth targets we were looking at. And the process is delaying as their expectations are only going up and up. So, I mean, we are in a catch-22 right now with respect to the costing and pricing.
Okay, thanks a lot.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Asta Sundarka from Niveshaay. Please go ahead.
So one question. Can you give me the number of dealers segment-wise for the last 3 years?
Number of dealers?
Segment-wise.
Segment-wise is very difficult. I don't think we have that data as of now. But segment-wise number of dealers, we can definitely provide you. Just drop a small email and Luthra sir?
Okay.
Yes, sir. I will provide her once we get the.
For the last 3 years,
So I will get it done.
Yeah.
Okay. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Kushal Chudi, an individual investor. Please go ahead.
Hello, sir. Congratulations again on the great set of numbers. Sir, I think you answered my question earlier as well, but just wanted to know on the inorganic acquisition which we were planning. So as you mentioned last time, we were looking to close this by year end, but as you told that it may take some time. So are you looking to raise additional funds for that? I mean, is the valuation challenge in that? And secondly, on the African expansion, can you just give color on the same? That's it from me. Thank you.
With respect to our inorganic growth prospects, we are stuck on valuation. With respect to one of the opportunities that we have really explored in quite some depth. And another one we gave up eventually because we did not see value in that business. Apart from that, there is one opportunity for backward integration. So that thing is happening. Unfortunately, that company has currently gone into liquidation. It's gone into uncertainty, so that process will take its own time. We are going to be an active bidder there. I cannot disclose any more details on this. And with respect to our upcoming venture in Ghana, so that seems to be on track. We are expecting our advances in the month of November itself. And hopefully some activity will start on that in the next quarter. And it is being planned to finish it within FY24 with respect to setting up the manufacturing factory and all the facilities. So that recurrent revenue can start coming from FY25 on.
Okay. Thanks. Thanks a lot.
Yeah.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Aman Shah from GTA Investments. Please go ahead.
Hello. Hi. Thank you for the opportunity, sir. And congrats on good set of results. Sir, I just have our guidance of growth of 25% for this year. In H1, we have done around 45% growth. So H2 means like somewhere around 10% growth. Is it because of maybe high base of last year, or it's just a conservative side that we are guiding around 25% growth?
A, it is conservative. I'll be very frank. And B, definitely we have to keep in mind that last year Q1 was pretty subdued on account of COVID. So that is also the reason that first half you are seeing 45% growth, because in this one of FY22 was pretty subdued because of COVID. Because a really severe COVID wave was on. That is also a factor. Growth can definitely be much more than 25%. And that only time will tell once it happens, because we do not want to commit something which we might not end up doing, but it seems evident that we shall be able to grow faster than.
Sure. But the buying outlook from the customer side is strong, as I can read from your comments.
Yes. The buying outlook has become strong again. The number of inquiries, the number of conversions, everything has started to increase again. And, we are on a strong foothold. Our export was lacking in the first half. So we have received some very good orders for execution through our channels abroad. And hopefully, even the exports will be able to do much better in the second half. And we should be able to cross 100 crores in revenue at least in exports as well.
Okay. So the second question was on construction equipment. What would be in this 146 units that we sold in this quarter? How much would be backhoe loaders?
Construction equipment in this quarter, 131 are backhoe loaders in this.
Okay.
No, sorry. Yeah, approximately that much, yes. Backhoe loaders.
Okay. So in last Q1, you said there is some rental, it's a lot of sales of backhoe loader happen for rental income. In a way, the rental proportion is high, and that is not to the level which can increase good demand for backhoe loaders. One is, where do you think industry growth has been in Q1, in Q2 for backhoe loaders? And second is, what do you think should be our quarterly numbers of backhoe loaders? Where do you think we should see this in next 2-3 years' time?
We definitely post BS4 and all this inflation happening. Backhoe loader market overall has gone down in the last 1.5 years, especially post April 21 onwards. But if we talk quarter on quarter, like yearly basis for quarter 2, I think the numbers are more or less stable because the market had already started going down in the last year. So it is maintaining a similar pace. But yes, our numbers definitely need to improve quite a lot. So, in the first half, we have done close to about 234 units, but we are very confident by the end of the year this should be upwards of 700 units. And going forward, I think we are looking at least 250-300 units every quarter, maybe from next year on.
Okay, fantastic, sir. Thank you, sir. All the best.
Yeah, thank you.
Thank you. Next question comes from the line of Chinmay Kabra from MK Global. Please go ahead.
Yeah, hi, sir. I just had a question. There is an one-time exceptional item of 20 crores, which is coming in your other. Just a minute, sorry. Am I audible now?
Yeah, better, definitely.
Yeah. So just wanted to know, sir, what is the one-time exceptional item of 20 crore which is forming part of other income?
Which was reported last quarter?
Which was reported last quarter, yeah, sir. If you could just mention.
I think it was somewhere around 19 crores.
Exactly, sir. 19.76 crores.
See, that was land and building which was there with us in Romania.
Okay.
In our subsidiary Forma, which was disposed of. So that was that one-time exceptional sum of around close to 19 crores.
All right. And another thing, sir, which you just recently brought up, the financial asset which is forming part of your balance sheet. Just wanted to know if you could elaborate in terms of what is the nature of the asset which is involved under it?
Luthra Saab, this is that same financial lease?
Yeah, that's right, sir.
Yeah.
Basically, these are crawler cranes and 1 or 2 piling rigs, which have been given on lease basis to customers at a good rate of interest and good return for the company.
And on an accounting perspective, why isn't this being shown under ROU assets, sir? Like being a financial lease, just wanted to know.
So there, let me clarify. There are two things. One is ROU and one is financial assets.
Yeah.
ROU assets are basically those assets which we have taken on rent as per accounting standard. That has to be there. So ROU assets are basically not our assets, but these are different assets. So financial assets are owned by us only.
All right. Got it. Yeah.
Thank you. Next question comes from the line of Asta Sundarka from Niveshaay. Please go ahead.
Good evening, sir. I have 2 more questions to ask. One is, you have increased the growth estimates in crane segment from 20 to 25%. So, where are you getting these orders from? That is number 1. And second is that you said you are receiving export orders as well. So, are these orders from the defense segment only or from the other segments as well?
See, the crane orders are all across because cranes are used everywhere in infrastructure, in construction, in real estate, and also in manufacturing, as well as logistics. So, cranes orders are spread all across, and I think everything is going good as of now. And with respect to the export orders, they are more to do with the tractors as well as some agri and construction equipment. So they are from the African continent and also from the Latin American countries, which are going to be executed now.
Those are in the defense segment or in the other segments like crane or?
They are all nothing to do with defense segments. They are all from general private sector of these countries, in these countries. And for defense, we are supplying only in India.
Thank you. Mr. Asta, we request that you return to the question queue for follow-up questions. A reminder to all the participants that you may press star and 1 to ask a question. Once again, a reminder to all the participants that you may press star and 1 to ask a question. Since there is no more questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Yeah, thank you. I think we have been doing reasonably well in tough times, and hopefully going forward, the global recession scare, does not take off the steam from Indian economy. But what I hear and understand is that Indian economy is reasonably insulated from these things. And we are on track to expand our revenue by at least about 25% in this year, if not more. We are confident it can be more, and our EBITDA margins are further in for expansion on account of cooling off of commodity prices and further coupled with increase in our revenues. So hopefully there are good and better times ahead of us. And like we did mention, we are setting up a new plant to manufacture bigger cranes in India of higher capacity. So all of that will augur well for us for our future growth, and hope to continue to do the same. Thank you.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you, everybody.
Thank you.